Hello, good afternoon. You've tuned into Your Stocks, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much for tuning in. A quick look at what the market is doing this afternoon. We've seen a bit more of a fall coming in for the Nifty as well. It's below the 22,900 mark now. 1.5% of a decline that we're seeing coming in for the Nifty 50. So surely keep an eye out on that one. Other than that, we have the Nifty mid and small cap that's seeing a sharper fall as well. Almost near the day's lowest point is that what the Nifty mid cap is trading at, as well as the small cap. Mid cap is down 3.2%. Small cap is down almost 3.874% almost, we could say, coming in. So from the day's highest point, look at the fall that's come in, and that's just intensified. Advance decline ratio, it's favor of the declines versus advances, there's no doubt about that. So that's also something that we're watching out for. And Nifty Bank, which was managing to hold on to some bit of a green, that has also flipped and gone to the red. It's down 0.1%. Only one which is managing to hold on to some few very stocks on the financial side right now are holding on and keeping Nifty Financial Services a bit on the positive side. Pharma, obviously, among the top sectoral losers, I beg your pardon, coming in today's trading session, as well as metals among the top sectoral loser as well. So keep an eye out on what's going to be headed in the last 1 hour of this trading session. It's going to be important to watch out for as well. 1.5 hours will be key to see where Indian markets also close. But on that note, let's get started with the show for today, where we solve all your stock-related queries. And joining in with us, we have our independent market expert, Shahina Mukadam, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, to answer all your stock-related queries. Good afternoon, Vaishali, as well as Shahina, and thank you so much for joining in with us. Let's get started with the queries for today. We have this first query that's coming from Rajan Nair, who's writing to us from Mumbai. He's holding 1,000 shares of ITC, price of 160 rupees per share. Currently, the stock is... Okay, it's ITC Hotels, I beg your pardon. So ITC Hotels is what he's holding, 160 rupees per share. Currently trading at 199 rupees, and he's a long-term investor. Wants to know if he should continue to hold at these current levels, add more, or maybe look to exit also and book out his profits. Shahina, afternoon, and let me take this to you. ITC Hotels, obviously recently we've seen that demerger coming in, but overall, what is your outlook for ITC Hotels?
If you compare ITC Hotels to, its nearest competitor, the large, Indian hotels, I think it is still available at a discount to Indian hotels. In terms of quality of the properties that they have, it is definitely comparable. Of course, in terms of size, it is smaller, but at the same time, the potential to growth, because, now that they're demerged as standalone entity, I believe that they can grow through various ways. Also, in terms of their organic growth, it is possible that they can expand management. They can take over management of hotels also incrementally. Also, they can have strategic tie-ups going forward. See, I have personally added it, but at much lower levels, of course, when it first demerged, and even through the ITC demerger. But I believe I continue to hold, and I believe it makes sense even to add at current levels if you're a long-term investor. So for me, it's hold and add.
Okay. Can look to add if you are a long-term investor. ITC Hotels is what we're talking about. So I would expect my producer to show ITC Hotels. ITC right now obviously is buzzing away in trade. But Vaishali, on the charts and technicals then, ITC Hotels, what should the viewer be doing with this one?
Hi, very good afternoon, all of you. So I think, the way market is going, it's quite in a, corrective, and it's dampen the sentiments of the bullish view. So I would say, since it's already getting good returns, no harm booking partial profits. And if this stock again further dips to around 185, 180 levels, that would be an ideal level to add again. So partial profit booking should not be ruled.
Okay, partial profit booking should not be ruled out as well. Okay, let's move on to the next query for today. We have Mir Khanna, who's writing to us from Mumbai. 20 shares of Polycab is what he's holding. Price is 5,200 rupees per share. Wants to know the prospect of his investments. Polycab, Shahina, Polycab is one of the stocks which had really done well post-listing, and there was no stopping it as well. Just kept going up and away. 5,200 also is a very high level from what its listing was. So now what should they be doing? Because they're making some bit of a loss on this one. Do you think we could see that run-up coming back for Polycab?
Well, see, yeah, that run up that has actually happened has made the stock pretty expensive. So even after this correction, in my view, it's still expensive. If you look at it, it's almost about 26, 27 times EV to EBITDA. And, I would say FY26, so current year. And at the same time, the major issue out here is Ultratech is likely to come in with an investment of 1,800 crores into the same line of business. And I would believe, even if their Polycab is able to maintain its market share, which looks a bit difficult, but because 50% of the complete market is already organized market. So they would have to give up some market share. Also, I think this will keep a cap in terms of how much they can pass on any price increases. There could be a pressure on margins. All this is medium to longer term. But at the same time, because of the expensive valuations, I would say one can book some part profits. Not to say it's a bad company, but it's expensive.
Not a bad company, but expensive. Obviously, that's what we're keeping an eye out on. Plus, competition is also increasing. Vaishali, your view coming in for Polycab, right? Because I think in December itself, just December 2024, when you look at it, it was around the 7,500 mark. Now, today it's at 4,999 approximately. What should you be doing with this? What should the viewer do? Get out of it? Because his buying price is a bit more higher than the current levels that we're seeing today.
So I would say actually it is showing signs of weakness, but all the same keep a stop loss of 4,800, because if we see a decisive break of 4,800, it could trigger further selling pressure because, the trend is still weak. It was still showing some consolidation, and once again, it seems to be getting a new round of selling pressure. So 4,800 is the final support. Hold with a stop loss.
Okay, keep an eye out on the stop loss, and that's key to watch out for as well. Maybe some bit of a decline, but stop loss will be key to maintain over there. Let's move into the next talk for today. And next query for today, we have Vishal Jain, who's writing to us from Kanpur. He's holding 80 shares of Industar. Price is 320 rupees per share. Wants to know if he should remain invested in this one. Shahina, we have seen those recent announcements that came in on the Vodafone side just this week, with the government stake, converting it into equity, and that will increase their stake. With that, we had seen that Industar also see a bit of a run-up on that day. But overall, your view now for Industar?
Yeah, Vinny, that was one of the best news that you could have had for both Vodafone as well as Indus Towers. And this also, this helps Indus Towers in a couple of ways, because Vodafone does account for almost about a third, most likely more than a third of its revenues. So the fact that now Vodafone will have that leeway to go ahead and expand, it could take some further loans, it could expand on basis of a larger asset base. So to that extent, it's a positive. And Indus Towers, historically had been, it has not in the recent past been a good dividend payer. So I would say it is advisable to continue to hold. Looks like it could do better from here. So Indus Towers, yes, it's a hold. They're positive news.
Okay, Industar, that's a hold view coming in from China. As of now, making 320 is the buy price, and stock is trading at 362. Vaishali, your view coming in for Industars, right? Overall, in the last 1 year, it's had its fair share of ups and downs, but managing to give a return of around 18%. What should the viewer do now?
So this is one of the few stocks which is having a good trend, and for a short-term perspective, 375, 380 is the resistance. But even when I'm looking at the weekly and the monthly chart, I think this stock is a hold for long-term purpose. One may get good returns from here on too. So continue holding and add with the support of 340.
Okay, add with the support of 340, can continue holding this one. Next query for today, we have Venkat, who's writing to us from US. I beg your pardon, writing to us from Chennai. He's holding 100 shares of Canfin Homes, and this is at a price of 588 rupees per share. Stock is trading at 668, making some bit of a profit on this one. Wants to know whether he should continue to hold or buy more shares at the current level as well. Shahina, your view coming in for Canfin Home?
See, it's a small cap housing finance company. I believe its valuations also are not expensive. It's just current year 1.8, FY26 1.8 times price to book. They have given a very strong guidance in terms of ROA they are expecting, they've given a guidance of more than 2%. They're talking of a ROE of 17 to 18%, a good growth coming in both in the AUMs of about 15%. So I think all these things put together, along with a decent valuation, fair valuation, it could be a good hold. You could also add.
Okay, good hold, and can also look to add maybe Canfin Homes on the charts. Vaishali, your view?
This too is in a trending mode, and I think 640 is the near-term support, 700 is the near-term resistance. So if one needs to add near the support levels and look for a positional target of 780 to start with, and from there on we can have a relook.
Okay, 780 to start with is a positional target that you're giving as well, and the support levels where you can add. But on that note, we're going to step into a very short break, and here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app from the Apple Store or the Google Play Store, or you can just scan the QR code on your screens. Welcome back to Your Stocks on CNBC TV18. Thank you so much for staying tuned into the channel. Let's move on to the next query for today, and this one is coming in from Umesh Goyal, writing to us from Patna. He's holding 50 shares of Trent, and this is at a price of 5,000 rupees per share. Wants to know what he should be doing now with Trent. Currently trading at 5,500 approximately levels. Hold or look to sell and book out some profits. Shahina, your view coming in on Trent, right? We've seen that, the value play from Zudio side, which was working for the company, the revamp of West side coming in, a lot of changes that Trent has also made. And plus, the stock has seen a very good run-up. There's no stopping it since till the recent time. We've seen that very, very sharp run-up. So what should one be doing now?
All those things are a positive, and the run-up actually made the stock extremely expensive. Now, even after the correction that we've seen, it still remains expensive. It's about 80 times current FY26. In terms of valuation, it is expensive. At the same time, most of these initiatives that they have taken will be a long-term driver. And in the shorter term, it could consolidate a bit. So I would say if you're a long-term investor, you continue to hold. If you're a short-term investor, I think you could take part profits. But otherwise, given the quality of management and the initiatives they have, including even Star Bazaar, they've got that also on their list. So I think it's a hold for the long-term investor.
It's a hold for the long-term investor. Vaishali, your view on the charts and technicals, right? It has become a bit expensive, like Shahina was mentioning as well, because we've seen that run up in the last few years, especially since COVID. Didn't stop till 2024. So what is it that you're watching out for on the charts?
No, precisely. Stock has fallen from 8,500 to recently making a low of 4,500. We've seen a run up, but technical resistance comes here strong at 5,600, and that's what we are seeing. It's not going beyond. So I think there could be a further retracement. So of course, if it's for a short-term holding, one needs to book profit or keep a trailing stop loss. And I think the fair value for this stock would be somewhere around 4,500 to 4,300 level.
Okay, keep an eye out on those levels over there for Trent. Let's move on to the next query for today. This is coming from Venkat Matta, who's writing to us from Hyderabad. He's holding 1,500 shares of Central Bank of India. This is at a price of 42 rupees per share. Wants to know whether he should continue to hold this or book the loss. Currently, the stock is trading at 36 rupees. Shahina, your view coming in on Central Bank, would you suggest a hold, or maybe there are other banks which the viewer can, look to invest in?
See, Central Bank is one of the banks which the government has announced that it will be offloading, some bit, like maybe 2.5–3% of the equity. There are 5 banks that they have listed out, and this is one of them. So maybe at a higher level, I would have been a bit negative. But if you see in the last couple of weeks, or I would say even days, the stock has corrected quite a bit. And at current levels, the valuation is now below 1 time price to book. So I would say that, even if the government was to come out with their issue in the near term, I don't see too much of a discount from current levels. So the OF and plus the OFS of about 2,000 crores, that would enable them to, have funds to grow their advances further for the medium to longer term. So I would say if you're an investor, you could continue to hold.
Okay, as an investor, could continue to hold central bank. And on the charts, Vaishali, your view?
I think it's deep oversold, even on the daily, even on the weekly and monthly. We have seen very good correction. So, no point exiting at these levels. Wait for the bounce to come whenever it does, and we can have a relook then.
Can have a relook, wait for the bounce, and then look at it. Right now, Vaishali also feels on the charts and technicals, it's in the oversold territory. So maybe we could, look at it once, it comes back to those levels or bounces back. Let's move on to the next query then, and this is coming from Priyanka, who's writing to us from Noida. 20 shares of ONGC is what she's holding. This is at a price of 200 rupees per share. Wants to know if she should continue to hold, book out her profits, and long-term outlook is what she's watching out for. Long-term outlook point of view, does it make sense to continue to hold ONGC? Shahina?
This is a very difficult stock to give any long-term answer on. I'll tell you the reasons. One is because if you look at valuations, it is not expensive. If you look at current year valuations also, it's about 8 times price to book. It is a good dividend paying company. It is, of course, a government Maharatna, Navratna, very good company. Now, these are the positives. The negatives are quite a few. One is, of course, crude oil prices we are seeing coming off. If you see the last quarter, their average realizations were about $72. So now it has come much below that. So if you look at 1 quarter forward, there could be some issue regarding this issue where, the price have come off of crude. So inventories could take a bit of a hit. Secondly, if you see ONGC has a subsidiary in Venezuela. Now, you don't know what the Trump government is going to do in terms of tariffs, and if anybody has any imports from Venezuela, what is going to be the impact on tariffs and on the company. So all these things are very, there are a lot of gray areas. So what I would say is that it is better to switch from ONGC. There are other sectors, like for example, next week you have, a shipping company which the government is going to offload some stake for the retail. You could pick up something like Mazgaon Dock. You could pick up something over there. So there are alternates where you should, in my view, switch.
Okay, there are alternates and better to switch as of now is the word coming in for ONGC from Shahina. She's highlighted both the positives and negatives for y'all. On the charts and technicals, Vaishali, any different story? And would you suggest anything else on ONGC then?
I think ONGC is on a corrective mode. All likelihood, it will retest 200 levels and perhaps go low. So I would say exit for now.
Exit for now. Okay. So better options coming in. Even Vaishali is highlighting exit for now. Shahina has given you the pros and cons. So keep an eye out on that. Let's move on to the next query for today. Now, this is coming from Deepak. He's writing to us from Bihar. 15 shares of Tata Technology. Average price is 1,099. Okay. So significantly higher from the current levels. The buy prices. So long-term prospect for this Tata Technologies. Shahina, your view coming in for Tata Tech, right? Because after the listing, I don't think it's managed to, grab on to that upside or anything on that front. So what are you watching out for? And fundamentally also, how do you think Tata Tech is doing?
No, it hasn't actually. And so the investors have not made any money on it. And given the expensive valuations, it's 8 times priced, I think price to book, 40 times P. So despite the stock not having performed, it still remains expensive. The overall tech sector is likely to see some bit of a slowdown given the fact, that the overall GDP of not only US, but the rest of the world is likely to see, we really don't know, but we could see some issue out there over the next, couple of months. So to that extent, IT could take a bit of a hit on an overall basis. Tata Tech is also going to be impacted by the auto sector, not really likely to do too well over the next 2-3 quarters. So I don't see any, reason why to be in Tata Tech. If you want to be in IT in the same group, I would say TCS is a better option, which has the same problems, no doubt. But at the same time, I think they should do better when the rebound comes for the next 6 months to 1 year.
And on the technicals, Vaishali, a quick take. What should we watch out for?
Definitely, it's not showing any signs of strength. It's only showing a new low that is likely to take place. So I would not recommend right now.
Okay, not recommend right now for Tata Tech. New lows are expected. But Vaishali as well as Shahina, thank you so much for joining in with us. This was the last query for today. Have a great weekend. Hope no surprises coming on Trump front and hoping for a better market next week at least. But with that, we'll wind down this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. Up next, your closing bell to take you to the last hour of trade.